Morning everyone and welcome to today's morning report with me, Rich Perry, market analyst at Tech Markets on Friday the 12th of September. These European markets have started fairly mixed again, and that's come after another fairly uninspiring session that we had out of the States yesterday. There was initial weakness, but that sort of was retraced into the close to finish pretty much flat across the board. And that sort of filtered then through into the Asian trading session. Again, mixed markets in Asia. Um, not overly helped by the sort of slightly lower money supply data out of China, which just confirms some of that declining inflation numbers that we've had recently out of China. So the session in Asia was, as I said, just fairly uninspiring as well. So what we've seen today in Europe, a very slight open higher, but that has been retracing back towards pretty much flat as we speak. Certainly on the FTSE anyway, early gains have been retraced. But the DAX also had opened slightly higher, but has now retraced back to around about 0.3% down. So it's just still being weighed down by these just news about the China sanctions and also the UK market being held back by the fears over the potential for Scottish independence. But the big move that we've seen today, or certainly over the past few days, has been in precious metals, where the pressure is certainly on, and I'll talk about that in some of my charts in a bit, and certainly my chart of the day silver does focus on that as well. In terms of the dollar, we've had a bit of a day of consolidation on the dollar yesterday. But today it's sort of trying to sort of get going again, although the euro and sterling are just holding up fairly well. The commodity currencies are slightly weaker today, though, so that is helping to sustain the dollar move. But as I said, we've got a fairly mixed session today. This morning's economic data, there's no real drive out of the European session, but traders will be certainly looking towards the US retail sales and the University of Michigan sentiment to drive trading this afternoon. Retail sales in the States expected to jump to 0.6% on the month, which would be a positive, and also the Michigan sentiment, that is expected to come in at 83.3, so an improvement on the last month. Usually the consumer data out of the States has been tended to be a positive for the markets. In terms of the chart of the day, as I said, silver is my focus today, and we're breaking some key levels, certainly on silver and also gold, but this silver chart is now below that 80.60 key low from June, and I'll show you in the gold chart later, but gold has also broken through its key support from June as well. And that now opens the lowest levels, certainly 1819 is that key support from June 2013, but that is the lowest level on a multi-year basis, and that would be a very big support that gets broken if that is seen. So that 80.6 breakdown reopens that 1819 support, and that is a very critical support that we've got there. In terms of the momentum indicators, they are very weak. In fact, you've just had the MACD lines come together and looking like they're trying to accelerate away again onto the downside, so that is not a positive signal in any way at all. But you would hang on to the fact that the RSI is back at 25, so maybe a little bit stretched to the downside, but certainly this downtrend that we've been in on silver for the past 8 or so weeks, 9 weeks, suggests that any sort of rally you get in silver is a chance to sell. The initial resistance of that downtrend comes in around 1925, so there is room for a fairly sizable rally, in fact, within this downtrend, but certainly the downtrend seems to be accelerating now, and it looks like any sort of rally, I think, would be a chance to sell. So you'd be looking around that 18.80 level, I think, maybe, for a chance to get out, but it certainly looks like further downside will be seen. A close below 18.6 would certainly confirm this breakdown today. Okay, well, I wish you good luck in your trading today, and I will speak to you later. Thank you.